Damn, I just talked for like 3 minutes and nobody heard me. All
It was
right.
just a dry run. It was just, the dress rehearsal.
Did we lose you again, Captain? Are you talking? Yeah, so now we can't hear you again, Cap.
So I'm wondering if this is a Discord thing.
Yeah, because I can hear you now, but when you were over there just now, if you were talking just a second ago,
Okay.
we couldn't hear you. So start talking, and we'll try to follow. And if we lose you again, we'll try to figure out where it's at and maybe try to
Yeah,
solve
I
it.
just double check. You're not on push to talk, so it's not that.
Yeah, I'm kind of wondering if Dan has a point. Maybe when I change the tabs, if it's something screwy there.
Could certainly be. Are you using the? Oh, you're on Mac. Okay.
Yeah, I'm using my laptop. Figured out how to share on my laptop, but not on the PC.
Yeah, it definitely seems to be something with switching the tabs there, changing the focus. Can't hear you again. If you had the app on your Mac, we could probably work it out, but
Let's do this. Okay, did that do anything?
Can hear you fine.
Okay. Okay. All right, can you hear me now, Ivan?
Yeah,
Yeah.
I can hear
It's like
you fine.
it's like that old was that AT&T commercial?
Uh-huh.
or
Thank you
Verizon.
all
Can
for
you hear me now?
holding through our technical difficulties. Your program will resume shortly.
Yeah, we lost him again. It's definitely when he changes from the Discord tab over to the Benzinga tab.
Okay, so let's try this.
I mean, when you share your screen, it should ask what screens you want to share. Maybe that's where the issue is.
Worst case scenario, if we have some jacked up audio, I can always like kind of type up the notes and stuff I was going to share, and I can always post it on the floor. Worst case scenario. Okay. All right. So let's try this. All right. Can you hear me, Deb?
I
Yes,
can hear you.
sir.
Yeah,
Yes,
yeah.
sir. I muted myself. Sorry.
Okay. Can you see the screen?
Uh-huh.
Okay.
Looks
Cool.
like
All right. So
Finviz to me.
yeah, as a matter of fact, it is. So okay.
Imagine.
So I'm do what now?
Nothing. No.
Oh, you're good. Okay. All right. So Yeah, sorry about the technical difficulties. So really, I'm just going to share some basic stuff. Nothing that I think is really necessarily super earth-shattering, but a few things to really just kind of really what I look for, and a few things that hopefully you guys can be aware of to keep from getting tripped up. We haven't had really a great swing market for a good solid year now. Um, it was a fantastic swing market for the 2 years prior. Um, and for even about 5-6 years prior to that, it was pretty strong. So this is really what I've been doing primarily since 2003 is swing trading. I've really only been doing the intraday trading, the scalping for about 2 years now. So the swing trading has been primarily my bread and butter for about the past 19 years. So really just kind of sharing with you just some bare basics on that, some stuff to look out for. All right, so can you guys still hear me?
Yes, sir.
Oh shit, there we go. Progress. Cool. Okay, so let's see. All right, so I'm just going to show you. This is a like a tried and true thing right here. So because I think we've probably got like all different levels of folks in the chat right now and listening in. So I'm sure probably everybody's familiar with Finviz at least to some extent, and this will be where we'll go to look at floats and good stuff like that. One thing I want to share though is that Finviz is not 100% accurate. So we'll kind of come down the chart here, and no, I don't pay for the elite on this. Okay, well, it doesn't even share a float on GOVX. So let's do one of my favorites. Let's get up in some Revlon. Okay, so we come here. I'm gonna ignore the chart for now. So if you guys look right here, where it shows the 54 million shares outstanding and 5.42 million float and an 86% short float. So this would be like info that you would look at face value. And if you were just to go ahead and take this and run with this, you would almost think that this is about to be the next AMC. This is about to be the next GME. We're gonna absolutely squeeze some shorts to death on this. The only problem is I looked at Revlon probably about this time last week, and it said 86.52% short. Absolutely, in some form or fashion, that short float has changed in the past week. I don't know exactly how often they update this, but don't rush into a decision based solely on what you see here or what you see here. There's something I'll show you guys in a little bit to where you can find some hidden dilution and filings too that also helps disprove what you see on the floats. So I just want to throw that out there because I see Finviz get referenced a lot in other rooms and on FinTwit, that you'll see like these screenshots, and I'll be honest, I've been guilty of it in the past myself. That this thing is going to run. Look how small this float is. Look at how high this short is. Like the sky's the limit. Unfortunately, not necessarily the case. Like this may not be the true number. Nor this right here. So I want to kind of add that as a caution because I've seen that actually screw up a lot of people who, whether they do their own research or if it's somebody who has a larger following who is trying to find the next big play that they can share with all their followers. So something that was a very consistent strategy for a couple of years was you would just find like a very beaten down, bottomed out chart, typically post offering. So you'll see it like this isn't an offering, but just as an example, if you had a company drop an offering, and then you come right down here, and then you start seeing some base where it's almost like barcoding. So that plus small float plus short float, that used to be a recipe for like a 2xer. Like you can almost double your money on that. And you'll still see people trying to pursue these kind of plays. I keep an eye on them just out of force of habit, just because it's been successful for me in the past. But to be totally honest, this is not something I've really seen with a lot of consistency, particularly in the past few months. Zen's in the chat. We can. Hey, we don't want to share our swing and stuff, brother. That's for after dark.
Zen is out. Yeah, Zen is in voice. So the king
Oh
also
shit.
another kingish swings.
Oh no, right. Different kind of swinging. That's on the that's for after midnight.
Yeah, Zen will be doing the late night swinging education.
This is not true.
Yeah, so he comes. So I'm kind of pretty much opening for the options crew. I guess Zen's going to be the closing act. Yeah. So if you're looking for tickers, this is a pretty solid one here. And if you want to kind of come through, pick whatever the hell you're looking for. I'm a big fan of the solars right now. And I actually found something kind of shady in one of the solar tickers that I wanted to show y'all. Ah, shit, I don't want to look at auto parts. And so far, the voice and all that's still good? All right,
Yes,
wait,
sir.
no, it was semiconductors. Okay. So I was actually taking a look at the semiconductors at some point Friday afternoon when I was pretty much done trading. Because we've had a lot of news in the past, couple weeks about semiconductors. There's been some stall in really what's going on there with Congress. So I typically do not like to. I don't like to swing low floats personally. A lot of what I swing is actually going to be more mid cap. I'll occasionally do some small caps if it's ones I've had success with. But primarily, like mid caps is what I prefer because I feel like it's a lot less likely to knife on me, and I feel like the price action is a little bit cleaner. But if you're looking for something within a particular industry or a particular sector, so if you're looking for semiconductors, I don't like micro floats for a swing. So let's say if you want to look at over 20 million. So then from right here, you can just look at the charts. So, and then AMD probably being the clear leader. And you see how, looking at their chart right here, they're heading in a real nice direction. When we come down right here, and so we see MEKR right here. I've never really heard of this one. So you see what we've got, what looks like a bottomed out semi play. And even Finviz is trying to tell us this is a multiple bottom. Yeah, so this would be a pattern that probably a couple years ago this would have been a consistent play. So you've got something, not sure if that was an offering or what that was, but you've got something that looks fairly bottomed out. We've got a little bit of the double bottom, maybe triple kind of going here. It looks like it's maybe possibly found some support, maybe around the 3-ish, maybe like right above that $3 psych level. So you come down, you look at the float, so 34 million, not huge, not too small, I guess, whatever, 37 shares outstanding. So they're making money, so they're at least positive to income as far as Finviz is concerned. So for this one right here, I want to dig a little bit deeper. So this is where I go back to Benzinga. And this might be the part where my audio kicks out again. So if you'll tell me, Deb, if it's actually this that screws us up. All right, can y'all still hear me?
Still hear you.
All right, cool. All right, so Benzinga is literally the only thing I pay for. I don't pay for any other scanners. I don't really mess with any of it. And really, the only reason I even like Benzinga, their news is actually slower than other places, but I just like the ability to go in between the filings a lot faster. So we're going to look into EMKR. So, not a great looking chart there. So we come through here. So that's where you're going to see Finviz and other places. You're never going to see the exact same thing as far as with the floats and stuff like that. So to really get that, you really just need to go into the filings for stuff like that. Looks like they've got a pretty good amount of toots and decent, not great on insiders. But I want to learn a little bit more about this company. So I want to look at something a little bit more recent. I don't really care to go through their conference call notes. So looking within the past 3 weeks, not much. Looks like somebody took a passive stake. So let's see who this is. And I know this is probably awkward, but hopefully you guys can see this for their 13G. Okay, so it looks like BlackRock is taking a passive stake. 270K. Okay, so not a horrible thing to see. BlackRock's actually kind of neutral for me. BlackRock throws money at pretty much everyone. The best analogy I've ever heard from BlackRock is they'll give 10 people 25 cents and hope that one person gives them $5 back. So when you start seeing BlackRock taking passive stakes, that could be something that you see a lot of people celebrating, but in my opinion, that's not really a big deal. So we come up here. So we actually see that we've got the 13D, someone's taken an active stake in this company. So who is actively jumping in this bad boy? Okay, so somebody named J. Carlo Cannell. And let's look and see what his, okay. So we see this number right here. So 2.8 million, 7.59%. So that's pretty substantial.
And Captain, quick question. Can you explain the difference between a passive stake and an active stake?
I can touch on that a little bit later, but so like with the BlackRock example, they're kind of just investing. Like often I've seen with active stakes, there's a little bit more participation in the company. You ever watch that show Shark Tank?
Yes.
Yeah. Can you hear me, Faceman?
Yes. Sorry, I said yes.
Okay. Have you ever watched that?
Mike.
Okay. Yeah. Yeah. So if you think about this, is not a great analogy, but it's the one I'm going to use. So you kind of think about that show Shark Tank. If someone's taken, like, let's say a 40% stake in this company, they're having that conversation where I'm going to help you do X, Y, and Z. But if somebody's only taken maybe a 0.02% of the company, they're providing some liquidity, but they're not really, they don't have enough skin in the game to where they're going to invest their time typically. So typically with an active stake, it's someone who's a little bit more involved in what's going on in the business. And if we're looking at, a percent that substantial, this guy's, has at least like some level of influence. I don't know if he's on the board or not, but so percent of class represented, so 79%. So we kind of come down here. So identity and background. So this guy he's the sole managing member of this capital, which has these three entities. So you see Tristan Partners, Tristan Offshore, Tonga, and some separately managed accounts. So, okay, so a little interesting, but let's come down here. So the securities to which the statement relates were acquired by the person using the working capital of each investment vehicle as follows. So the investment vehicles have invested an aggregate amount of approximately $12 million in the shares. Okay, so this is substantial. Like, this is not a small investment this person's made. We're going to come down here a little bit more. And when you go into the active stake filings, you're going to see where they're going to be reporting. I think it's like 60 days out. They're going to be reporting what they've actually done as far as their shares. So take a look right here, going back to June 16th. So, and this is this J. Canelo, guys. So this is his form. So you're seeing 28,000 at 313, 76,000 at 313, 7,000 at 318. So you're kind of coming down here. So you start seeing some significant dollar amounts. I don't know what the hell this $385 is. Maybe he just needed groceries or something. But you're seeing where, he's reporting out, his sells. So we've got some significance here. So we've got an insider who he hasn't really dumped like a significant portion of his shares by any means. But you can see on a pretty regular basis, this guy's managing, like he's managing this account. You know, he's executing trades on this. So let's pull up the chart on this one. So this was, you know, EMKR. All right, so I'm switching to a different app. So if my audio kicks out, tell me. Let me maybe look at like, maybe I'll do like the 90-day 1 hour on this.
Yeah, and your audio is still good.
Okay, good. Okay, so if we're going back to around when this guy first started selling shares. So somewhere right in here, so it looked like the low was maybe like right under that $3 cycle level. Kind of maybe 350s, you know, not taking these little wicks into consideration, but like body of the candles. So we've got about a 350 to about a $3 range. So we only have 50 cents worth of range here within the time frame this guy started selling. This guy started actively moving his shares. So I think every single one of us has probably been in a trade where all of a sudden you get a kill candle that comes at you out of nowhere. Well, here you go, black and white. So just out of curiosity, I'd kind of like to learn a little bit more about this gentleman right here. So Tristan Offshore Fund Limited sounds kind of shady. Okay, so Tristan Offshore Fund Limited. So okay, fair enough. Nope, I don't want to look at your damn pop-up. So we've got Tristan Partners. That's probably not the same people. Tristan Partners, no, Tristan Partners LP. And sometimes as simple as it sounds, sometimes just looking at their website, you know, if they even have one. You know, does the website look shady, or does the website look like it's something significant? Okay, so I mean, it's not unprofessional. I mean, it's pretty decent, you know, basic website. Which I hope it would be for someone who's managing, you know, that level of money. So let's find, just out of curiosity, just kind of curious to see this gentleman's office. You know, what kind of office is this guy working out of? And as silly as it sounds, this is like some of the DD that I'll do on swings when I want to kind of just learn a little bit more about this company that I'm potentially going to take a flyer in. You know, how you like that downtown district right there?
I'm going to do this on Zen's company as soon as we're done. Good idea. Thanks.
All right. So it looks like Mr. Tristan Canello. So here's his home office. Looks like he's got like a dirt driveway. No judgments, of
my
course.
compound. I'm gonna have
So
to
all right,
Google Maps to block it.
Yep. So all right. So you know, he's working out of his house in some, I'm assuming, like little small town of Wyoming. You know, probably not a huge deal. So that's just a little bit of a, like, out of curiosity. I just want to kind of learn a little bit more about this company. I shit you not. There's been times I've done this, and it's literally like like a post office box or something. Like, it'll actually have the address for the post office, and so presumably like that's what they're doing. I don't know how legal or illegal that is, but you'll come across that kind of thing sometimes. So, and somebody officing out of their home, not necessarily, all that shady per se, but if I'm potentially looking to make a sizable investment in swinging in something, I just want to really just leave no stone unturned just to see if there's anything I need to know. So really, I have one red flag though. On a stock where if I'm potentially thinking a swing, we've got 50 cents worth of range, and what could possibly be part of the reason why we have 50 cents worth of range is the extent to which this guy's dumping shares. So if he has no problem dumping 40,000 at 333 or 20,000 at 328, if there's any kind of Momo here, I have no doubt that this guy's going to be unloading a whole lot more. So the reason why I bring this up is if you only look at charts and you just kind of go into Finviz and you're basing your entire swing thesis on the chart and you're not taking any other factor about this company in consideration, at best, you're just really going to have your money tied up in something that's going to have a pretty poor ROI. Part of the reason why this thing, possibly has this double bottom could potentially be because of some of this right here. Yeah, I agree about the cash on hand and the shelf offerings. So, but this one right here, but with the cash on hand, like especially cash versus debt, and looking for like the S3s. We hear people talk about that a lot, but what I don't hear people talk about is looking at the active stakes and looking and seeing like buys and sells and this kind of action right here. So that's really why I want to bring it up, just because it's something I don't really hear talked about very often. All right. Have any questions or anything so far? All right. So far, so good. Okay. So, all right. I'm going to get this bullshit off my screen. So I'm going to go ahead and share a couple of swings that I've done lately because I've gotten a bunch of DMs. I actually gotten like 5 DMs about this one right here. So CNX, so this is actually an energy company that I took a swing in at 16. I really was not even expecting to get filled in this thing. So this thing actually first caught my attention when I was looking at beat down energy plays. So I don't know if y'all would remember, maybe it was like early mid-June or so. You would see Biden on TV talking about the energy companies posting record profits while there's pain at the pump, and seeing a lot of news stories about the energy companies pulling back on that. And if I'm not mistaken, let me. I want to actually find the actual PR I read that made me actually look at this ticker. So I'm going to go back to probably about mid-June. Okay, so you see right here, so June 16th, basically the energy companies trading lower with the Fed rate hike and then pressure from President Obama, and how this thing right here kind of just starts giving you all these right here. So I actually looked on TOS and actually started looking at most of these, and the reason why I settled on CNX. So when I do swing trades, I actually start at the 5-year monthly chart. So the big reason why I do 5-year monthly is because I want to see a good healthy amount of time. So if you look about, all right, where's June 2020? So if you see like right here, which was the bottom on this ticker, so June of 20 is when COVID started. Pretty much just about any ticker you look at, you're going to see a giant pullback during the early stages of the COVID pandemic. So I don't want to base the chart I'm necessarily looking at on that pullback alone. I want to actually go back farther and see what this thing has actually done historically. So actually going all the way back to 2017. So I went through here and I'm discounting these lows from COVID, knowing that that's not something we're likely to see again. And, God help us if that level comes back. So I started looking for some target levels. So when I do swings, I don't personally, I'm not trying to find like the bottomed out ticker and I'm just going to like hope like hell it goes one day. When I do swings, I like to add into strength. I want to actually see an uptrend and I'm seeing volume that's supporting that uptrend in a bullish way. So when I first went into this one right here, so I literally went all the way back to, September, or it was August, September of 2017. And the pennies, like your pennies aren't going to necessarily match on this because keep in mind, you're looking at a monthly chart. It's not like a 5 minute or a 15 minute. So looking at psych levels. So you see like right here, we've got some resistance right here around that 14, I think it was like 14.19. A little bit of support right here, kind of covering part of the body. It's not going to be perfect because keep in mind, it's a monthly chart. A little bit of support here, a little bit of support here, then we're back into resistance. And then we got some pullbacks, possibly from their earnings, which I guess they had decent earnings. So I think, this is what actually identified. So even, about those first few weeks of COVID, it actually popped right back up at one point to that 14.19. Kind of floundered a little bit as it went into the winter months. And then, so if you're not familiar with TOS, so the highs and lows is all going to be right here. So about 14.09, 14.20, we kind of come here, it's about 14.18. Kind of roughly the top of the body right there. So this was actually what I was hoping to catch. I was hoping to catch something in that $14.50 range, definitely below $15. So that would have been my ideal entry on this one right here. And taking into consideration, you look at the monthly chart. So you start looking at the movement that we're seeing right here as it's following this trend line. So short of that, so looking at next levels, so it looks like about 16, going all the way back to February of 18, and just really looking at where the trend line's covering the body, or at least kind of within the margin for error. So we're seeing so if you look at the top, 1606, like 1642 or so. So you see this top wick right here, 1589, pretty close. 1608 for this wick. And then you see on this candle, low of 1633, a low of 1616. So I put a starter in for $16. I really wanted to get 14, and I would have committed a lot more capital if I would have gotten a position more in that 14 range. Ideally as close to 14 as possible, but I was willing to go up to about 14.50. So really my starter in this was I was willing to go to 16. And this is really how I identified those levels, was actually going all the way back 5 years and seeing where it's had some support there. Okay, you guys can still hear me okay?
Yes, sir.
All right, I heard somebody click their keyboard, so I'm assuming that's a yes.
That was a yes.
Yep. All right, perfect. So if we see right here, so with that PR I talked about, so we were looking at, those early stages of June, so we hit some highs right here in 24, and then we get the Fed rate hikes, other impacts in the market. So then we start seeing this pullback right here. And it was, it's getting a little bit closer to my target. And I was actually a little indecisive if I was even going to take a position or not, because I was really having my heart set, my plan being that $14 range. And what actually made me decide to go ahead and jump in at my starter level. So if we come up to think this was only a couple weeks ago, because I remember actually talking to Faceman about this when I saw the PR. I don't know if I mentioned I'd actually been looking at this one before. Okay, so July 14th, the New Light and CNX announced strategic agreement to capture methane emissions for production of air carbon. So looking at this particular PR, so 15-year agreement, capture and utilize methane emissions for the production of air carbon. I actually have a buddy of mine who works in energy in the Houston area, and I actually texted him. It was like 5 o'clock that morning, and I actually sent him a picture of this and said, "Hey, is this a big deal?" And he told me it was. Like it's pretty significant for the really, I guess, like the cleaner emissions, and knowing that that's really a direction that this particular presidential administration is focusing, which we actually just saw that with the Inflation Protection Act that just came this past week. I think it was like $369 billion for renewable energy over the next 10 years or whatever. So even prior to that PR, but just knowing that this kind of stuff, so the renewable, basically, blah blah blah, that cleaner energy is going to be something that is going to be looked upon well. So when I saw this PR, I said, all right, well, I would have liked to have caught some 14, but let me just take a starter at 16. I actually got filled like not long into open on this. Let me go to the 20 day. So I put this on here earlier today just so to make it easier for me to talk about. So I actually caught a little bit of 16. It wasn't near the size that I would have liked to have gotten, but it was a starter. And as the day went on, so it started pushing closer to that $17 level. So I went ahead and took half my profits on it. Just because I'm a big believer in scaling. I'm a big believer in taking profits. And feeling fairly confident I might still get like another dip, another pullback to where this could be a longer term move for me. And then as days went on, you kind of see how we're going up into the 17s. So I actually took a much more substantial position in a different account. So I caught some 1824s, I think right at the open. I guess that was the 21st. And I started kind of riding that. But then I realized that I'd made a horrible mistake in my thesis on this trade, was that I'd forgotten about earnings. And so traditionally, I'll play the run-up into earnings, but I'll rarely actually hold through the earnings. And I didn't actually figure this out until however many days ahead of time. So on this one, I went back. So let me go to the 3 here. I know. So as far as looking at the ticker's personality, how does this thing act during earnings? And particularly, let me actually look at the most relevant quarter. So this would be, for quarter 2. So let me actually look at quarter 2 for last year. So I'm going to go ahead and just assume that TOS is accurate here. So if you actually look at that right there, that's actually pretty shitty earnings. For a 2.5 estimate, and then for them to have missed by $1.61, that's actually pretty rough. So you see how this thing just acted after the earnings. So just really looking at the comparable quarter year over year. We're in a different market environment now, but regardless, seeing where we've got a history of some pullback. So look at this one right here, history of some pullback. This one right here, history of some pullback. You get the picture. That this particular stock's personality, sometimes gets a little bearish on the pullback. So even looking at, so even like that'd be quarter 1. On 60 cents, they actually lost $4.62 a share, which is kind of awful. You started seeing what it did there. So that was a point at which, all right, I screwed up, and I didn't take the earnings into consideration. So I kind of held this for maybe like another day or two, and then I actually sold that entire position that I took from my E-Trade account. So from the 1824 ads, I took the profits at 1925. When it comes to swings, I don't look for pennies on swings. I look for dollars. I'm not. This isn't a. I'm going to put a ton of money to make like 3-5%. I'm looking at like worst case scenario. I'm trying to get at least like minimum 10% worst case scenario out of these. But this right here, $1 share. I felt okay with that. I'm not going to complain. Fortunately, I'm really glad that I did that. I'm glad that I reacted, because then you see their earnings from this past week. They at least were in the black. 79-cent estimate to a 15% actual. But so this ticker's personality. So look what just happened. If I had held through that, I would have turned a winning trade into a big ass kicking. So that's why I went ahead and dumped that. Good piece I've learned there is play the run up into the earnings, but don't hold through that unless you have a fantastic average. So, and I do still have half my position from $16. So from 17.27 looks like the close on Friday. So I'm still doing okay. I'm still more than $1 up on this one. But looking at the long term, and this one's actually in my Roth, by the way. So, but looking at the long term, I am anticipating getting a little bit closer to. So I actually did put a kind of a top target of 22. Is that 22.50? A top target of 22.50. Potentially maybe a couple months or so from now, or the run up into their next earnings. So I got a couple of DMs about this one, what the thesis was, why I took when. So I just want to pull this one up and share that one with you. Any questions so far? All right, we're
None here.
Let's see. All right, so another one that I only had one person DM me about this, but so gel. So this was one that I took, and I actually still have most of this one. This is one I actually played early this year. So looking at the 5-year. So you see, this one really took an ass whipping during COVID. It looked like it wasn't doing great before. Oh, and by the way, so gel is it's a like renewable green energy company, by the way. So you see how this one, really took an ass whooping during COVID. Kind of floundered a little bit. And then the beginning of the year, this one started getting interesting. Let's do 2-year weekly. So around, I was curious if it was going to start making a little bit of a cup and handle on the weekly. So that's actually what made me look at this one, just because I'm a fan of the green energy sector, so I like to stay close to these and see how they're doing, see what they're doing. So I initially kind of saw this move, but I felt like I was really late to an entry. So this is one I kept on a rough watch list, but I really didn't start trading this one until I started actually seeing a pretty nice trend right here. So let me see if I can actually see if I can find a time frame that actually shows this better. Nope, the hourly looks like shit. Oh, 15-minute really looks like shit. Maybe, okay, here we go. So looking at the daily on this. So I'll actually show you what actually caught my attention on this ticker. So we're looking at the daily. So we see this hammer candle right here, the movement afterwards. So the day I actually saw this ticker was actually the day after this candle right here on the daily. So I'm just going to kind of move this to the left a little bit, so you can kind of see what I was seeing when I first took position. If we were momentum trading during the day, whether it's a small cap or whatever, if we were trading during the day and we saw this on the 5-minute, like this would be something that, okay, we're feeling fairly bullish about this when you start seeing these kind of candles right here, that long lower wick, and you start seeing the upward movement and seeing this again. So this was the point I started really drawing the levels on this thing. Okay, so I found about 1046 or so, going all the way back to like right after Christmas last year, to January. So you look from December 27th to January 24th. So seeing, okay, we've touched this level again. So I didn't take a huge position on this one, but I went ahead and took right here. I took some 1050. The thesis being, just looking at the VPA, we've got the higher lows and the rejection of this lower price. So I took the 1050 ad right there. It looks like that was the 25th. And it looks like the second. So about like right at a week. I went ahead and closed that one at 1170. So about $1.20 a share on about call it like roughly a weekish, about a week or so worth of swing. Really just kind of took my eyes off of it, but I tend to circle back to my winners and ones that have done well for me in the past. And looking at the daily, then here comes this candle again. So this being the third time we've seen a hammer candle like this, even though this one didn't wick down as hard, but looking, closed higher, same thing, closed higher, higher low, closed higher, higher low. And that particular candle right there, so I'm kind of following the same thesis on the price action here. We might see the same thing. So I put in just under the $11 psych level, and it looked like maybe a couple days. Yeah, so yeah, it looks like from the 24th to about the 2nd. So same thing, roughly about a week, 5 to 7 days roughly. Just kind of let it do its thing. And then so from 1099 to 1217. So that's about what I'm looking for. It's about, not quite 10%, but a nice little gain there, a little over $1 a share. And then just seeing how, I guess you'd call that an ascending triangle, maybe. And you see how started making the same move, and once again, it's worked for me a couple times in the past. Let's do it again. So kind of same thing. So, but then it hit my it hit one of the levels that I identified. So on that 1275. So same thing. So looking at the 2-year weekly, we go all the way back to, looks like June of 21. You see that 1278 on the high, 1275 on the high. Kind of crosses right here. Then you see on from 411, you see how around where the upper part of the body. So seeing about 1275, there's a resistance level there. So that being a point to where I don't want to hold and hope that it's going to break through and go to the moon. I've got some resistance there. Let me go ahead and take profits. Not a huge gain. It's like 70 cents, but whatever. But fairly consistent, fairly predictable. I did not take a re-entry here because we have seen this particular setup fail many times about the past 9 to 12 months or so. You kind of get this little triangle going up. It's a lot of Fubers will tell you it's coiling, it's ready to go, but we've seen this pattern fail. We've seen this setup look like it's about to do something, and then here we go. So just recognizing that setups are not going to work out perfectly, and when you're seeing setups that are failing more often than not, just minding the risk, having a good realistic plan. Let me just take my money and let me get the hell out of here. And fortunately, I did. I didn't have any red trades on this one. And once it started doing this, so now it's broken the trend. We're seeing this trend of higher lows. So it broke that trend. I kept on watch, but I never really saw a point to where I didn't see something better than this one, so I never really gave it any more attention. And then we get this big sell-off right here. So around the same thing with the energy and the Oilers in June. So you start seeing this big giant ass pullback, and then it's found this level again around this $8 psych level. So the relevance of $8. So we literally go back to, December of 2020. So you see the high on that weekly candle, $7.96. So low of $8 on September 13th of 21. And then like right here again, so 805 the low on June 20th. So seeing where, as this one pulled back, it found that support again. And just looking historically, like literally going back almost 2 years, like finding that there's a support like right here at the $8 range. So seeing that, might have to do 5 minutes on this one. And with this being a renewable energy play, that's why I jumped back into this one with the news that those have gotten, and TOS is not trying to cooperate with me right now. So I think that was 941. Still don't look right. Okay, this actually looks a lot better right here. So on the 28th, which was that like Thursday or Friday. So it took some $9, some 905, some 909. Just kind of watching the price. This one, I had stop loss on this one. And really what I was willing to risk was about 870. I was just looking for the lows from the previous day. I didn't really think it would get there, especially since they had actually fantastic earnings that day. It's actually a 15-cent dividend on a $8 stock, which is pretty decent. So they had very solid earnings. I don't remember what it was, and it's only about $1 above a very solid support level. So I started kind of adding in here these like low like $9 ads. So 905, 909, added some 922 as I started seeing some strength, and I also started seeing some volume picking up. So you see here, we've got some little, like a few thousand here and there. We got a 52,000, a 37,000. And this thing just did the whole slow grinder thing that stocks like this will sometimes do. So, and I think I sold like half, or no, I think I sold I even notate here. I have to go back and look, but I did take profits at 993 though. From these initial ads of 905, 909. It was actually, I think the 905s was actually the position I took profits on. I still have the 909s and the 922s. So that one being that was actually the same day. So it's like take position, really kind of looking for something out of the open. A little bit of like a fishing order, so to speak, just to see if you get like that morning flush. Even with good earnings, that'll sometimes still happen. Not consistently to the extent that we used to see, but you'll still sometimes, if you want to see something wild, just look at 1 minute candles right out of the open. You'll see shit just like push down crazy, and then you just kind of like wait a little bit, and then as you see it pops up. This one I just want to see if I could grab some down there. I didn't get the full position I was looking for, so that's where these ads came into play. I wanted to make sure it didn't lose trend, start going down this way, that it was actually showing strength, and it was actually showing some upward momentum. So from an early part of the day to the end of the day, not quite $1 a share, but 80-something cents. And this was one that I didn't really even put a whole lot of effort into. This was actually a fairly easy one, but just because this is one I'd played before, and I was fairly familiar with it, fairly comfortable with it. Cool. All right, any questions on that one? I do not remember who asked me that question, so I hope you're listening in. Let's see. Yeah, I would never swing this one, but if you want to see that monkeypox is the best thing that ever happened to Sega, look at this shit on the 2-year weekly. $6, $7 stock. Boom.
Oh, that's got to be water on
the pace to get one Red Bull.
I think was it. So I did have this was actually a while back. I did actually have somebody ask me if I ever short and what my best short was. So my best short was actually RSX. This one I actually made almost as much on this one as I made in my entire accounts all of last year. So kind of sets the stage. So RSX was it's a Russia ETF, and I think we all remember what happened in February. So I'm too old to get recalled back into service, but something I can do is profit from the demise of Russia's economic interest in the U.S. So I actually took a fairly substantial short position here in RSX. So it looks like the 26th, 28th, I think. I know we were all watching the news on this, and I think we were in disbelief that this was actually happening. And so when it did, so really just from a trading perspective, I just went and looked and okay, like what's Russia that's in the U.S.? Because short of Russia, like actually attacking a NATO ally, and I just know, having been in the Navy, that unless they broke some like very serious like non-negotiables, that there was no chance that we were actually going to fight a war with Russia, especially after the Russians made a not so thinly veiled nuclear threat to the French. But what we are going to do is economic sanctions. So understanding that this is something that's coming. So TOS was actually being kind of weird. So I actually called my long-term broker, which is JP Morgan, which I actually have probably the longest relationship with them of anybody. And so I actually took it was actually about more than half of what me and my wife paid for our house. So that's one I actually talked to my wife about it before I actually even pulled the trigger on this. So, and the locates were actually expensive as shit too. So at a 1632 is where I went into this one. Was that more than 6 months ago? There we go. So about 1632 is where I initially took the short. So, and I distinctly remember this day, and I think I actually vented about it on the trading floor. That like, okay, like who the hell is buying this shit? So it kind of shorts down on the news and the the coverage of the fighting, and then you start seeing this shit right here to where it actually starts getting bought back up, and like, okay, so I didn't know war in Russia on Ukraine was bullish. So I actually ended up covering right here at 1574, just because this action started making me nervous, and because in a short position you definitely need to be careful. And then once whatever that was right there, and in hindsight that could have actually been a much bigger fish than me covering. I don't know for a fact, but certainly possible. I went back in at 1150, again pretty substantially on my short. So, and then I think it was actually maybe just like a couple of days, or maybe even like the next day, I had something happen which has actually never happened. My broker actually called me, and I didn't answer the phone. I don't answer 1-800 numbers, and there was like a phone number from New York. I didn't answer it. A phone number from New Jersey. I didn't answer it. I'm like, okay, who the fuck's trying to call me? And I actually got a voicemail, and it was so and so from JP Morgan. Like, we need you to call us back. It's about your account. So, kind of like freak out a little bit, like okay, like what's going on? And it was one of the brokers actually said that we highly encourage you to close this position as fast as you can. I'm like, okay. And is there anything you can tell me? And he just said, just volatility concerns. We encourage you to close this. So, and I was actually kind of pissed about it at the time, but I'm thinking, okay, it really was my broker. Like, he was able to recite to me, my account number, my information. He told me to pull my account up, refresh the screen. So I saw he actually did it on his end, actually executed the cover for me. And I got a little pissed, not gonna lie, because from that short, I covered at 903, you start seeing how far this thing comes. It was only a few days later, I think it was like on a Friday, when that bell closed, and RSX has been in halt ever since. Since, I guess that's be the 4th of March. So while I was initially frustrated at the time, my broker really saved my ass on this one, because that'd have been ugly to have your capital just locked up for months and months on end. So, but that's just kind of I guess the short piece of that particular piece there. Now, really, I jumped on this one because this was a no-brainer on the bearish side, and for the particular, like this particular, ETF and this particular security, this is one that I felt very good about shorting this thing into dog shit. So yeah, so that's the gist of that one. Okay. Any questions? Everybody good so far? Anybody need to go to the bathroom? Cool. I appreciate it, Noah. Yeah, I think you and I actually might have chatted about that at the time, because I remember like typing on the trading floor, like, "Hey, has this ever happened before? Like, have you guys ever had your broker call you and tell you to close a position?" And I think of all the years I've been trading, I think that's about the closest I've ever come to shit in my pants, just not knowing exactly like what in the world was on the other side of that. I don't remember exactly. Okay. I don't have any notes on this one, so I'm not really going to go over it. So Sabre is one that I've swung this one in the past. Kind of mixed results. I'm not 100% sure why I have it on here, so I'm not even going to talk about it. Okay, so I think that's pretty much the gist of that. All right, you guys have any questions? Anything at all so far? The last 10 seconds didn't happen. Happened for me, Dip. All right. Did the voice cut out again? Or can you guys hear me? All right. Deb is typing. All right, cool. Okay. All right, so does anybody have any questions? Anything you guys want to look over?
If you guys
I
want to
do have
ask a
something
question
that's.
in voice, we can unmute you, or you can type in trading chat if you have any questions.
I was kind of just curious. Do you
Okay.
stick to
So actually, there's one that somebody asked me about yesterday.
Noah was trying to ask you something there. He was just being very quiet.
I was kind of curious. Do you only stick
All
to
right,
small
fair
caps, or
enough.
do you do mid caps
All
as
right,
well?
so I had somebody ask me yesterday what my
Could
thoughts
you
are on
not hear
INDO.
Noah, Captain? Can you not hear him?
I don't think he
No, I
likes
can't
me.
hear him.
Yeah, I don't think he likes you either. You're
Just
one of
ask
those
him if he
options
sticks to
traders.
small caps or if he does mid caps as well.
That's all right. We
He
love the
said
options,
he
folks.
said at the beginning, Noah, that he prefers mid caps for swings. But the question, Captain, was, do you stick to small caps, or do you also look at mid caps?
Primarily, I mean, there's going to be a few exceptions. I primarily swing mid caps. The main reason is I guess it would be the unpredictability of small caps. I think something there's actually a lot of folks that probably gotten burned the last couple of years swinging, and I think that's a big reason why. This is just my opinion. Tell me if I'm wrong. That we haven't seen like swing trading really talked about as much, these last about 8 months, because it's not as consistent. And I think what a lot of traders, especially if they never really traded prior to 2020, my assumption is that a lot of their experience with swing trading has been stuff that just kind of goes, like the COVID plays that just start flying. They put out like the most little BS PR, and well, I don't have you muted. I promise, Noah. I'm going to click the no on that. But yeah, so folks who started trading like March of 2020, like you didn't have to really put a whole lot of thought. You could get like really lucky in a huge way with minimal effort. People could just slap shit and be up 10-20% like it's nothing. So I think that era created a lot of bad habits. And I think that as people found success with that for a sustained period of time, to where they had this kind of success, and then the real world has happened again, and this isn't the way trading works, to where you slap and you make money, you slap and you make money. Like, no, you have to identify the levels. There's a certain amount of fundamentals that goes into this kind of work. So I think the COVID era created a lot of unrealistic expectations. So I think people have been burned on swing trades. I think there's also a certain percent of people who they've gotten burned on following Furu calls, which I don't think that any of those folks ever intended for those plays to go against people. But it is what it is. Like sometimes shit just doesn't work out, and so I think a lot of folks they're really just looking for, like, okay, low float, high short interest, it's a low price, it's going to go, and it's just not true. There are still a ton of folks, retail traders, and ones with big money, who they still jump into swinging small caps. I personally prefer not to be in those kind of plays with them, because it messes up the price action. If I see a pop, I don't know if that pop is something related to PR or something with the company like moving in a more natural way, or if it's moving because somebody tweeted. And that's something that you can't put any kind of risk management or any kind of financial plan around when someone is going to tweet and pump a stock for you. So those kind of tickers I stay away from. If I even hear that someone with a big following is in a trade, like, I don't touch it. Nothing against that person, but it creates a huge lack of consistency from what I've seen. And I would rather have consistent gains than gamble. But I still see a lot of that action in small caps, so that's why, as far as swinging, I typically don't, unless it's, now the exceptions would be if it's a particular sector that I feel like is heating up. I'm doing a lot of research on a lot of the green energy right now. I posted that in the worth watching. I'll send an updated one. There's a few tickers I've added to it, some more large caps. I don't trade options, but if something's a $200 ticker, like, I'm still not opposed to trading that if it can go from $200 to $220, $230. Like, I'm still good with that level of gain, even if I'm buying fewer shares at a higher price. So I don't know if that answered your question or not. But yeah, no, it's the consistency. I will trade the absolute hell out of small caps intraday, like pre-market and after hours. Like, I'll trade the hell out of those. I'll trade those like throughout the trading day pretty aggressively. But it's ones that typically, like, I'm getting in, I'm getting out. Like, I'm not staying on this very long. But with trades, I've just had much better consistent success with mid caps. Okay. Was there anything additional, or was that it, Noah? I see Noah's typing.
You don't want me to interpret for you, Noah? Like, I'm happy to.
I figured
your
30 people
interpreter.
didn't want to have a double back on the audio.
So I had somebody ask me about INDO the other day. We'll take a look at it real quick. I actually I couldn't tell you the last time I've looked at INDO. I didn't realize INDO was down to like $6 a share. So I mean, we saw this like insane like rise right here. Looks like it's kind of based in the, I don't know, 5, 6s or whatever. So according to Finviz, I mean, there's 7.41 people have. So 352 is the float. So it looks like it's highly shorted. So when you see these little price targets, ignore this. It's bullshit most of the time. So not making a whole ton of money. Good Lord, 2.5 million sales. So I think they might have like one well that's giving them that 2.5 million. Shit. Nope, I don't care about authority brands. So looking over here. So I don't know who Noble Capital Markets is, but I don't really care about their upgrades. So nothing really standing out here on INDO. And to save my life, I cannot remember who asked me about this. So I hope they're in the chat.
Luckily, your life does not depend upon it.
Yep. Okay, so let's see what INDO's got going on. Really, what I want to see is if I can find prospectus, maybe. Oh, here we go. Look at their 424. Let's see what kind of offering we got going on here. Okay, and I'm gonna look at the chat real quick. I want to see if the person who asked me this question is on here. Nope. All right. Well, I'm already here, so we'll talk about it anyway. All right. So even though that's from February of 21, so 20 million offering, closing price was $16.73 a share when they issued this on the 20th of July. Well, let's see. So really what I look for on here is there's going to be a section for dilution. And that's what I'm looking for. Okay, so it's where they do business. It's the offering. Okay, so their cash equivalents. Not horrible, I guess. All right, here we go. Okay, so our net tangible book value, or, oh shit. Oh, that's fun. All right. So if I'm not mistaken, so my understanding of net tangible book value is that if they were to really liquidate the company, let's say if INDO was to go out of business and they were to really kind of sell everything, minus their other expenses, that their company is worth $1.05 per share. So, okay, that's kind of fascinating actually. So INDO, which is trading, pull this chart up on INDO. And let's do our 20-day. Yeah, because I know we had a low right here in the last few weeks. So 561. So actually, screw that. Let's go all the way back to. These are typically going to be dated on the first. So the first of the year. So around the time, that valuation was done on the value of INDO. So I guess kind of that first week coming into the new year. So a high of 345, a low of 263. So yeah, I know, right? So that $1.05. So you see the company is actually trading at more than double the actual value of the company. So, and that's kind of an important thing to understand, though. Let's see. Okay, so I was right, wasn't I? Okay, cool. All right, just want to make sure I don't bullshit you guys. Now, so at $1.05 per share, so really the difference between that and the $5-6 is trading out now. I mean, really, it's Wall Street speculation is really the difference. What people are willing to buy this and sell this for, but you at least know that's how much INDO is actually worth. So, kind of an interesting little fact there. So their pro forma net tangible approximately 16.2 million or 174. Yeah, so this really is a little ass company. So here we go. This is the chart I was looking for. So the assumed offering price per share at 673 with their net book value at 105. So dilution is adjusted to $3.86. At that offering price. So this kind of info would not stop me from momentum trading this during the day, but this would make me very reluctant to hold the higher it goes. So I don't know who the lucky bastards are that sold this thing at almost $87 a share, but I have no doubt they're popping champagne on a beach in Mexico right now, or the Cayman Islands, or the Bahamas, or wherever, or at least shit I would be. So knowing that this company is really only worth well, as of this past December, was over $1. So I don't know if they've acquired more wells in Indonesia or what else they're going on. So maybe it's actually worth $2 or $3 a share. I'll keep that kind of stuff in mind. Like I said, it won't stop me from momentum day trading it, but that this would absolutely, even if it wasn't a low float, but just the valuation being that far off of the trade price, I would not long term it. Let's put it that way. This would be like a short term. Let me play a chart. Let me have a tight risk reward. Let me get out. But like this is not by any means something I'm gonna sit on and think this is going to be the next Exxon. So that's my opinion on INDO. Could be wrong, but just my opinion. I would not swing it. Okay, so I committed to 7 o'clock Central, so we have about another 40 minutes or so. Is there anything anybody wants me to look at while I'm here? You know what? Actually, hold on a second. I think I actually scrolled past something that was. Let me go back into this real quick. I didn't really stop long enough. There was something else that actually caught my eye on that. So, how many shares was that offering? Okay, I don't care about your wells. Okay. So really I'm looking for here the plan of distribution. So okay, let me scratch this itch real quick on what's going on with INDO, then I'll jump in and answer that, Noah. So okay, this is what I was looking for here. So the pro forma adjusted. So okay, so they're committed to the dollar offering price. So they'll adjust the number of shares based on the price of the share at the time. So I just want to. It's typically the case, but I just wanted to make sure that was actually clearly in here. So it's also when you see these offerings like this, not necessarily, but it can kind of make you wonder: is that really the float? So something to consider. Is there more dilution than what Finviz is telling us right here? But yeah, no, I agree. The insider ownership is definitely solid. I'll give it that. So am I constantly scanning? Oh yeah. So what I like to do is so the scanner that I use. So back to my friend Benzinga. There we go. And before I jump into this, average time horizon for these, or what do you look for based off price target? Typically, if it gives me a solid move quickly, I mean, I kind of showed on, I think it was Jill, I was actually CNX also. I took profits the same day because it actually started moving faster than I thought it was going to. The absolute maximum I will typically hold a swing if I'm really truly considering a swing is about a month. But most often like a week, 2 weeks tops. And I do like to kind of coordinate this around where the earnings are as well. So let's go back to, actually no, it was CNX. Market's not open, stop it. So the one thing that can kind of change the time frame a little bit is if I find the entry like at my level at the price I'm looking for, if it's like immediately like kind of after earnings, if it's still matching my levels, then I might hold it like a little bit longer. So I might kind of stretch that month on occasion, but typically a month is it. But you can kind of see between earnings, you typically have 3 months, but it's pretty rare that I'm actually swinging something that long. I like to just get in, get out. And then based off of price targets, so let me go back to this 3-year real quick. So I'm just going to pull up CNX one more time. So as far as so that's what I look for based off price target. Okay, so I think the question is am I waiting for it to hit the price target? Ideally, yeah, if that's the way it plays out. So with CNX, so I'm seeing a ceiling right here about 22.50. So for the $16 ads that I'm still sitting on, I'm content to let this thing go for a little bit longer. Now we've got earnings on, looks like October 27th, so got some time, just about, call that about 11 weeks or so. So I'm content to let it kind of do its thing. If it kind of gets above maybe like this 19 or so, and if it fails and it starts showing a more bearish pattern on the daily or hourly, then I might go ahead and cut it and just take my profits. And at that point, if it breaks 19, I'm in at 16. Let's say I'm at worst, I get out with a $2.50 per share. Then I'll take that and run with it. But really, what I'm looking for on this one's that 22.5. I'm looking for it to kind of make maybe hopefully like a little bit of a double bottom here and flag up towards that 22.50 level. But yeah, as far as the horizons and price targets, it's all off the levels, and it's not just off the levels; it's off a realistic level, not a pie in the sky, AMC to 1,000 level. It's like what has history shown as a resistance level that it looks like this can realistically reach that within maybe 2-3 week or so time period.
You had mentioned clean energy as a
Okay,
sector,
so
and then
LCID.
I think he's got me muted too.
No, I can hear you.
You had mentioned clean
I can hear you,
energy,
Dub.
and then obviously the conflict in Russia. Do you look at sector rotations at all, or are you just looking for what area may be in play at that time?
Typically, what area might be in play at that time? We haven't really seen consistent sector rotations in a while, though. We've had some points to where you'll have those random days where Oilers go. I mean, we had like IPOs this past week. Sector rotations, I don't know, it's a little bit more difficult to gauge those, or I guess what's like right here, right now. But my thesis, and I could be totally wrong on this, but I just have a good feeling that we're gonna see the green energy come back into play. So let me go back into my Google. So we can actually take a look and see what did this thing actually say. So the Inflation Reduction Act of 2022. That's right, yeah, because I think I read this yesterday. So if you look right here, so I think this is probably one of the most significant things that Biden has really pushed, and maybe has made some. I guess let me put it this way: it's one of the most significant things he's made traction on since he's probably been in office. So this is a pretty significant bill. So kind of ignoring all the stuff about Medicare and all that, and deficit reduction, but so 369 billion, over 10 years. So you call it about 36 billion a year. I'm thinking a lot of these solar companies, they're going to want to take advantage of that. They're going to want to put themselves in line to either get a government grant or get some kind of contract with the Department of Energy. So, but let's actually look at specifically solars in the U.S. And I'll come back to LCID, Rami, I promise. Let's look at solar. And let's look at USA. And 100% what Noah just said there with ENPH. And so let's actually look at the chart on ENPH. And yeah, ENPH has been the leader. And that was a big part of my thesis with GEL and EOSC. That was actually another one that I'm in currently. But with GEL also being a solar play. that was a big part of my thesis there was, I mean, look at this right here. All right, give us a second, let the ad go by. I learned the hard way not to click close on these. Come on. Damn, this ad's taking a little bit longer than normal. Okay. So yeah, so to Noah's point right there, so looking at ENPH, so now this already had a pretty nice setup, you know, going in right here. And then they had fantastic earnings and like boom. You know, I don't know if any of the options crew banked on this, but yeah, this was a damn strong one right here. Let's go. Yeah, so really right here on Finviz, just Solars USA. So this bill is specific to the U.S., so it's not going to do me any good to be looking at, you know, international. So looking at these here, so ENPH, in my opinion, is the leader. Like this is the one that's shown a lot of the best strength. Seeing some of these a little bottomed out. I think Beam is interesting. I haven't taken the time to really research this company yet, but this is one I'm going to take a look at. I had my eye on FSLR at one point, but it went without me. This is one that I hesitated on. I missed this one. I was actually kind of pissed that I missed this, by the way. Yeah, so this would actually be one of the other leaders for solar. All right. Yep, I'll see you in Voice in the morning, Ascended. Take care, brother. Yeah, so right here about that $8 billion market cap. So we're in kind of that mid cap range, which is what I like. That's what I like for swings. Yeah, you're not getting all the retail nonsense that's screwing it up. So yeah, if you look at this one right here, you call it from about 75 to like damn near $100. And I was kicking myself because this candle right here, I know you can't see it great on Finviz, but you can kind of a little bit that doji right here, and you see that hammer candle right there on the daily. I was eyeballing this damn thing, so Bofa would be proud. The $69 psych level is actually what I was looking at here, and looking at, you know, I know Finviz, you know, it's not as clean as TOS, but you can kind of see 69 is kind of somewhat a level, like not perfectly by any means, but a little bit margin for error. And then, yep, $99. Yeah, so that's one that I'm definitely sad that I missed. Another one that I haven't looked at yet, but it's on my list is ISUN. So I think this one is a small cap. I'm not opposed to swinging it. Yeah, so it's a 40 million market cap. You know, this thing claims 11 million on the float, 12.6 outstanding. You know, Finviz is showing the double bottom here. So this is one I'm going to dive into and see. So I'll take just a real quick look on ISUN right here. Okay, so I guess ISUN's not that old of a company. So I guess, okay, so I guess just January last year. Maybe like 90-day 4-hour. I mean, not horrible, not great. Have earnings in 2 weeks. So I wonder if, let me look at this one a little bit. Let me do the 30-day 5-minute on this one. So maybe $3 psych level. Let me see if the daily is a little bit cleaner. It doesn't have doesn't look like it's really had a ton of volume, so it can make the smaller time frames really hard to see. So it looks like we've kind of hit 264, 264, 268, 252, 251, 56, 251 on this one. So maybe about 250-ish. Maybe about 250-ish being support. Yeah, because it was well over that 4. Yeah, so maybe if you want to be generous, you can maybe go like 275. But yeah, probably about like 250-ish roughly. It was 250 here, then a little bit of a higher low, 264, 2 days in a row. It hit 264 and held that. So it's got range to 399, 415. So I don't know, maybe. Like this is one I take a little bit more time with this one really charted out. So if this one gives a little bit of a dip, now, however, let me go to the 20-day 1 hour. I would like to see this thing establish some strength though. So probably if this thing can show some strength above, let's say the $3 psych level, and actually, get some real nice strength there, maybe even we can get closer to this 350 as support. And if it can start showing some strength and actually following a consistent trend line, then maybe like mid this coming week, maybe Thursday, Friday this coming week, if it develops enough and if it kind of shows to right here, like where it's really established some strong support, moving in the bullish direction, then this might be one I might jump in. But yeah, I'm not trying to catch bottoms because I don't want to catch a falling knife and cut my hand off. I want to find where it's actually showing strength and support at the same time and try and catch that uptrend. But yeah, I think ISUN would be this would be an interesting one to dig a little bit deeper into it. Kind of the same like I did with the others, just looking at the filings, seeing if there's any active stakes that look a little shady. If there's anything in the prospectus, you're always going to have the shelves out there. You do want to be really careful about the S3s because fairly often you see that S3 and offerings imminent, so you got to be real careful with that one. That's probably the most significant filing you want to be familiar with. But so looking at how a lot of these, they haven't followed ENPH yet, but we'll see. The PR is still fresh. We'll have to just see how things develop. I think a couple of these have earnings, not this coming week, but I think the week after. So, but this is one that I could see the sector. I can see the sector taking off because you've got this. So this being one of President Biden's platforms is climate change, which goes into clean energy. So I can see this being something that not necessarily pumped, but it's going to get some attention. It's going to get companies that are going to want to get those contracts with the Department of Energy, et cetera. I think there's something to be said for going into August. We're going into the hottest month of the year, or at least in my area. So when people are counting back in like 110, 115 heat indexes, I think that helps drive some more of the conversation around green energy. So that's kind of my thesis on why I think we're going to start seeing some action here. And I definitely think these are worth watching. Although, to be totally honest, I actually thought there was more specifically U.S. solars than this. But on the bright side, it makes the watch list that much easier to manage. Oh, yeah, I know. Yeah, on the FSLR NOAA. Yeah, I was kicking my own ass for that one. All right, so LCID. So you tell me, what's your thesis, Rami? So I see you're saying they have earnings coming up. So Lucid. I'm not sure if she can hear me, so let me type in the chat. Okay, I'll give Rami a chance to type there. Okay. Hey Zen, don't you have a Lucid? Or did he jump off? Yeah, he jumped off. 16, 25, 19. That's a nice game. Not sure. $12, 16, 25. Yeah, you got a good entry, Rami. It's probably. I know I'm focusing on weekly here. So it looks like their earnings are on, I guess that's Wednesday. Personally, if it was me, I wouldn't touch it till after the earnings, but that's just me. So, like I said, I don't know how accurate TOS is on these, but so 26 cents a share versus 64 cents a share actual. So now, when it had earnings November of last year, made a hell of a nice move. So it's got that going for it. So 30 cents estimated. So they had an improvement versus their estimation back in May, which no doubt, from that 1325 to it looks like in this move to 2073 in about maybe a 2-3 week period. So I think what would give me some pause would be kind of like right here. You do have some resistance right here in 20. I'd actually try and see if it gives you a reentry closer to what you got before, that 1625 maybe. I don't think it's necessarily out of the question. But then again, I'm looking at weekly, so let's see. Okay, so 1325, 16, 1530. It's holding trend decently. Maybe.
For whatever it's worth, I've range traded Lucid a lot. Noah always gets on me about it, but yeah, it's been a really good one for me. Just trading within that range. Sometimes it's a day, sometimes it's a week, sometimes it's longer. But yeah, I really like the personality of Lucid.
Because I don't remember. All right, so don't get mad at me. I think I've shorted this before, but I don't think I've ever actually gone long on this one. Yeah, I think I remember first of the year. I think I remember going short somewhere up here. So, but I do like how since the earnings in May, it's establishing some higher lows. So yeah, no, I agree 100%, Trevor. Yeah, and I covered a lot sooner than I should have. I think I got like maybe a $2 move out of it, but I'll take it. Money's money. So going long on it, it's showing you some higher lows. So yeah. Follow your plan, Rami. Let's see. I'm just looking at the chat. So, okay. So Oracle's talking about something else. I'll let Ponytail talk about HKD. I'm not talking about HKD. So, not a financial advisor, but I would not touch HKD if I was any of y'all. Okay, so we're coming up on almost 6:45 my time. Okay, so yeah, so to answer your question right there, Noah. So for swing, I always start with the 3-year weekly on swing, and so one that I'm currently in, I think this is probably the best example of why. So I think I actually went to the I ended up actually going to the 5-year monthly on this one. So kind of going back to CNX that I was talking about. So this is one that I just took the entry, here just a few weeks ago. But I'm looking at levels from literally August of 2017. So looking at this, is that about that 1419, which I got that number from this upper wick where it rejected that real hard when it tried to recover during COVID. But looking like right here on these levels, like that 14-ish was a big level about 5 years ago. And then even like a year after that, it was a level again. And then it started kind of touching it a little bit over here. But this would have kind of been, like I said, this would have been my ideal entry. So for the entry I did take was on where the upper body touched on literally February of 2018. So we're talking like about 4.5 or so years ago. Like my thesis for a $16 ad like really started from a trend that started 4.5 years ago. So that's why I start with the big time frame. So it's definitely like some serious looking left, but it's worked out for me and it's helped me just identify like a long-term span of levels, and also taking into consideration where I really kind of feel like right now, this is just my opinion, we're going to get some of the more accurate gauges of looking at the daily, because now we've gotten a lot of the COVID behind us. It's really hard for me to gauge a whole lot off of like March 20. Like so many stocks hit their all-time lows. This was because of COVID. But I want to see, how did the stock act before COVID happened? And because I really want to try to take as much of the COVID impacts out as possible and see what those prior levels were. So now that we're kind of sort of more or less getting back into like a normal market pre-COVID, I personally think those levels are super important. But then from there, like I will drill in and I'll start moving right from there to the weekly, the daily, and the hourlies. So hope that answers your question, Noah. Man, options crew is savage. Deb Jong-un.
It's all in love. Like, we just love each other so much.
Yeah,
Right.
I was curious if the
Yeah.
senior. I was curious if the senior middle manager of options was going to jump in here. All right, so I know that it's going to be Trevor's turn here in a little bit. So, anything kind of like last minute you guys want to bounce off me? You want me to look at? All right.
Listen, you're just trying to turn people against me so you guys can heist my bank. I see you, Trevor. I know.
Yeah, I like how I get these little notifications. I'm like, holy shit, Peanut tried to rob me again.
At like 3 in the morning.
Oh, for real. Cool. All
Yeah,
right. Well, I don't
we
know if I really showed you
appreciate
that.
you
But
doing this and taking the time out. I think a lot of helpful information. If anybody doesn't know JD and Captain and some others have been hopping into Trading Voice sometimes throughout the week, which has also been super helpful. So really appreciate all of that.
oh no, 100%. And pretty much, like I said, I know I didn't cover like anything like super like earth shattering, but hopefully the folks who took the time out of their day walked away with something. Um, if you guys want to send me something to look at, then I'll look at it like whenever I've got a good opportunity for it. If it's a particular ticker, kind of whatever, or something you're looking to swing trade or day trade, I don't give a shit. I don't know enough about options to speak to that, so I'll defer that to Trevor and the other guys.
Yeah, if anybody is interested, Options Gang is starting a review session, EDU session, question answer period coming up here at 7 minutes. So